ASML is pretty much flat since my last video on the company in March. In this video, I will update the valuation and then further analyze the current geopolitical situation. Valuation. For the year 2025, ASML plans to achieve revenues between 30 and 35 billion euros and a gross margin between 51 and 53%. In fiscal year 2030, the company is expecting revenue in the range of 44 to 60 billion euros and a gross margin in the range of 56 to 60%. These assumptions can be translated into the following cornerstones for our valuation. To adjust for different scenarios, we distinguish between bear, base, and bull case scenarios. Out of simplicity, we also assume that ASML's EBIT and free cash flow conversion stay constant at the average rates of the last 4 years. Bear case. Within the bear case scenario, we get a fair value market cap of $317 billion, indicating that ASML could currently be undervalued by 9%. Base case. In the base case, the company seems undervalued by 35%, considering the middle of management's expectations for 2025 and 2030. Bull case. Through our bull case, so with assuming the high end of ASML's guidance, we get an upside potential of up to 63%. ASML in the eye of a geopolitical storm. The company is in a very sensitive geopolitical situation right now. Being a Dutch company that is holding a monopoly in the EUV lithography market and is in the middle of tensions between the US, Europe, China, and Taiwan. European Union. The company can be regarded as a national treasure of Netherlands and the EU, as it is one of a few companies based in Europe that actually has a relevant role in an important global supply chain. While this is definitely a comfortable position to be in, it might also have negative impacts. The EU or the Netherlands could use the company and its unique position as a political pawn to gain an edge in negotiations. As of now, the Netherlands and ASML played along and have complied with US demands to stop supplying certain products to China. Should the tariff disputes, however, escalate, ASML will most likely suffer as well. One possible scenario is that ASML is allowed to supply China with their EUV machines, which in turn might lead to lower sales in the US. Additionally, any push for strategic autonomy by the EU could also harm sales, if any protectionist laws further hinder them from selling freely. USA. Like mentioned, ASML was pushed by Washington to stop supplying their sophisticated EUV machines to China, and Trump's tariff chaos could eventually also hit the company. It, however, remains questionable if the US will actually implement tariffs on lithography machines, as North American companies are also heavily reliant on ASML services. But the same could be argued about the import tariffs in general. While ASML technology is some kind of political cover, it also traps the company in a policy regime with little to no influence of its own. China. As of the first quarter of 2025, sales to China represent 27% of ASML sales. Keep in mind that this rate is achieved by mostly selling less sophisticated DUV machines, as the export ban of EUV is already in place. Should the company also be forced to stop selling this share to China, may it be through direct pressure from the US or due to decrees from the EU, more than a quarter of ASML's sales could be lost in a matter of a few days. China is also retaliating against the EUV and potentially looming DUV ban through its own technology bans or sanctions against European companies, which negatively impacts ASML's supply chain. They are probably also developing own capabilities in the lithography process faster because of the restrictions in place. But what if sales to China get banned completely? To answer this question, we can plug the by 27% decreased revenue for 2025 into our 3 discounted cash flow scenarios. So even when considering no more sales to China, and therefore an instant revenue drop of 27% in 2025, ASML seems to be currently trading in the fair value range. Taiwan. Speaking of China, any escalation in the tension between Taiwan and China could also be negatively impacting ASML's business, as this most certainly leads to lower revenue with TSMC, Chinese businesses, as well as a disruption in their supply chain. Conclusion. Within our discounted cash flow analyses, we came to these valuation gaps. Considering that we are currently only paying a premium on ASML's business, in one of the 6 scenarios and their unique and necessary market position in a mission-critical business segment, I currently rate ASML a strong buy. What's your perspective on ASML? Do you use these prices to buy? I am currently also buying United Health and Taiwan Semiconductors. You can see my reasoning behind these 2 picks in these 2